Hi there. Last week, I was talking to a friend who's had her own business for a few years and is incorporating for the first time. She's going to be an S Corp. And I got us talking about taxes. So I wanted to share a few of the tax tips I've learned along the way. The first being that when I first started and became an S Corp, I had no idea that my corporate taxes were due a whole month ahead of my personal taxes. So if you are an S Corp, or became an S Corp last year, or you became an LLC and are filing as an S Corp, LLCs can file as an S Corp or sole proprietors, then your taxes are due March 15th, not April 15th. Now, I have some other tax saving tips that I want to share with you, but first, my disclaimer. Obviously, I'm not a tax professional, so please consult with one in order to discuss your specific circumstances. One of the changes that happened with the tax code last year is that we now get to write off 100% of our meals and entertainment. In past years, it was just 50%. So if you went out and took a partner or vendor or client out to breakfast, lunch, or dinner or coffee, and we're discussing business, then in the past, you got to write off 50% of that meal. Well, in 2020, you get to write off 100% of that meal. Obviously, I think they did that because we just weren't going out as much, but it's still just something that you should be aware of. The second thing is that the qualified business income 20% reduction is again eligible for the 2020 calendar year. So that first started in 2019 and they brought it back. So you get to write off 20% of your business income as long as your taxable business income was less than, it's like around 163,000 if you're single, and around a little bit more than 300,000 if you're filing jointly. So just really good to be aware of. I actually had to remind my tax accountant about it. So I'm glad that someone brought that to my attention again this year. And then there's some just common write-offs that I want you to be aware of. The first and most obvious one that a lot of people know is that if you have a dedicated office in your house, this means that you have 4 walls and a door, not just a table in the corner of your kitchen, that you get to write off a percentage of your household expenses. So what you do is you take the total square footage of your house and then the square footage of that office and come up with a percentage number. For example, if you live somewhere that's 1,000 square feet and your office is 100 square feet, then you get to write off 10% of any expenses related to your home. That includes your mortgage and rent. That includes your utilities, like your electric and gas bill. It includes your insurance, renters or homeowners insurance. It would include even things like cleaning, really any related expenses. Now, along the same lines, if you do have a dedicated home office, another thing you can write off is any furniture or decoration. Now, you probably know you can write off your printer and computer, but for example, I've redone my office a couple of times, and this last year I bought a stand-up desk and a standing pad because I was sitting so much. So things like that are 100% deductible from your, you can use them 100% as expenses on your taxes. A couple of other things you might not be aware of, but if you have a small business and are working from home, then you can write off 100% of your internet. Now, this doesn't apply if you are just working from home because you don't have an office to go to right now during COVID. This applies if you have some kind of side hustle or if you are now working from home full-time with your own business. The other thing you can write off is also your mobile phone. So things that you might not have been aware of, things that my tax accountant told me a few years ago. Then there's some of the obvious things like office supplies and software, but think about courses or books that you've bought related to business, podcasts that maybe you've downloaded an Audible book, right? Maybe you are subscribing to a trade industry magazine. All of those things can count as education, and any courses you've taken can count as well. The other category I want to talk about is professional services and subcontractors. So professional services include people like your business attorney and your tax consultant, but also your business coach, or maybe you have some other peer groups that you're a part of that you use for your business in some kind of way. So make sure that you have those professional services recorded as expenses. And then the final category is subcontractors. These are people that you're paying, like graphic designers, web programmers, writers, and social media people, VAs. These are people that you're subcontracting either because they're services that you don't want to fulfill yourself or for your clients. Now, most people know this, but if you pay a subcontractor more than $600 in a calendar year, you're going to need to send them a 1099 NEC. Now, those were due January 31st, excuse me. So it's too late for this year, but just something to keep in mind if you pay someone more than $600 in that subcontractor fee. That does not apply to the professional services. So hopefully you found some of these tips helpful. Maybe you found a new expense, or maybe you just sparked an idea for an expense that you might not have been aware of. And good luck preparing your taxes this season, and we'll talk to you soon.